Nvidia slipped, the Nasdaq bled 0.2%, and the S&P still closed green by 0.05%. That split screen is the whole story going into a week with Apple, the Fed, and a possible rate hike stacked on top of it. I'm Max Sterling. This is your StockStory market ritual, for minutes, the numbers, and what they're hiding. So here's the question that actually matters: if money is quietly walking out of tech and into hard assets and defensives, who's caught offside when the earnings wave hits? Because the index level tells you nothing broke today. Under the hood, something is rotating hard, and the crowd is still parked in the exact names that led the last 2 years. If that trade unwinds while Apple and the Fed are both live this week, flat turns into trapped fast. That's the setup. Look at the tape. The S&P at 7,411.98, up a hair. The Dow up 0.46% to 51,947. But the Nasdaq down 0.64% to 24,975, and technology the worst sector on the board at minus 1.44%. Now flip it, real estate led everything, up 2.22%. Materials up 1.93%. Consumer staples up 1.11%. That is textbook risk-off rotation, rate-sensitive and defensive up, growth down. The single stock damage was where the story lived. Max Linear got cut 21.54% to $71.59. Nebius down 15.02%. Bloom Energy off 14.91%. And the most active list is Intel down 7.89%, Nokia down 6.47%, Nvidia down 0.92%, the names everyone owns, all red. Ring Central did rip 25% and Tenet Healthcare gained 17%, but those are stories, not the trend. Now the scoreboard, because I keep score on myself. Yesterday I said the VIX stays above 18 into today's close, that the fear spike wouldn't fully reverse in a single day. It closed at 18.58. That's a hit. But I'm not going to dress it up, the running tally is 12-13. I'm one game under .500, and I've earned that record by being early on this rotation call more than once. One good print doesn't erase a losing week. Here's my read. The sector rotation watch we've tracked 6 sessions running just got its cleanest print yet, real estate and materials leading while technology is the only sector deep in the red is not noise, it's positioning. The market is de-risking into event week, and it's doing it politely, under a flat index, which is exactly how these things start before they get loud. What I'm doing, I'm not fighting the tape and buying the tech dip yet. I want to see how Apple guides and whether the Fed actually floats a hike before I trust any bounce in the crowded names. Watch the VIX at 18.58, that's the honest fear gauge here, not the S&P. So tomorrow's loop, with the Fed meeting and Apple earnings both looming, I think tech stays the laggard again and the VIX holds above 18 into the close. Fear doesn't unwind before the catalysts, it builds into them. Logging that call. Come back and grade me. Same time tomorrow. Subscribe so the ritual finds you.